Good morning and welcome to Market Gurukula. Today is Thursday, July 23rd, 2026. Let's look at today's Indian stock market outlook and the key factors likely to drive the markets right from the morning bell. We've got a lot of critical data and shifting global cues to unpack today, so let's jump right in and get you perfectly set up for the trading session ahead. Right off the bat, if we look at our earliest indicator, the Nifty is pointing to a highly cautious start. In fact, it's indicating a pretty definitive gap down opening today. Now, you might be wondering, what exactly is setting this pessimistic mood before the opening bell even rings? Well, it's essentially a potent combination of domestic expiring pressure and a really heavy global overhang. Okay, let's dive into this by taking a quick look at where we left off yesterday, just to understand the momentum we're carrying into today. And honestly, it was kind of a sea of red. Nifty 50 slipped and closed just a hair below that psychological 24,000 mark at 23,996. That's down roughly 0.8%. Sensex took a slightly heavier hit, dropping 0.92% to close at 76,755. And BankNifty? It really led the drag, sliding a sharp 1.23% down to 57,126. One absolutely crucial point of concern here is that the India VIX, a primary fear gauge, ticked up to 13.31. This broad-based selling we saw was mostly triggered by heavy profit booking at higher levels, paired with that global uncertainty, really starting to creep into our domestic markets. And speaking of that global uncertainty, $92. That is the price Brent crude oil is pushing past this morning. To put that into perspective, a rising crude trajectory above $92 per barrel acts as a massive macroeconomic headwind globally, but especially for us here in India, since we rely so heavily on imported oil. It puts immediate strain on the rupee, impacts corporate profit margins, and honestly alters inflation expectations almost instantly. But crude isn't the only thing spooking the markets this morning. Let's break down the other major factors feeding this cautious, gap-down environment. We're closely tracking escalating geopolitical tensions between the US and Iran, which, by the way, is directly driving that oil spike. That's creating a broadly weak sentiment across both Asian and Western equities. Back home, we've got the Sensex weekly options expiry today, which pretty much guarantees some wild, erratic intraday swings. And if we look at specific sectors, a newly proposed U.S. tariff announcement is putting heavy direct pressure on our pharma stocks right out of the gate. So the crucial point is, where are the technical lines in the sand? Well, the immediate support zone for Nifty is sitting right in the 23,880 to 23,900 range. And major structural support is pegged at 23,834, which is a big deal because it aligns perfectly with the 50-day exponential moving average. On the flip side, if the bulls try to mount a comeback, they're going to face some incredibly stiff resistance between 24,050 and 24,100, with a major technical ceiling looming overhead at 24,166. Translating all those technical levels into an actionable game plan gives us two highly distinct scenarios for today's session. Scenario A, if buyers step in and successfully defend that 23,830 support area, we can definitely expect them to attempt a relief rally, pushing back toward the 24,000 or even 24,100 mark. But scenario B is the absolute danger zone. If Nifty breaks and sustains below 23,830, selling pressure could accelerate aggressively, dragging us all the way down toward 23,720. As a trader, you've really got to let the price action dictate which scenario is unfolding before you jump in. Looking under the hood of the index, it's a tale of two markets. We're seeing intense sector divergence. On the positive side, defensive and domestic consumption sectors like FMCG and auto, along with select private banks, might actually see some positive flow as investors scramble for safety. Contrast that with IT, realty, pharma, and media. These guys remain incredibly vulnerable today. Pharma, as we just discussed, is taking a direct hit from that tariff news, while IT is really feeling the weight of weak global cues and tech sell-offs abroad. Tying directly into those sector flows, let's quickly rattle off the specific stocks you need to keep on your radar today. We're watching Bajaj Auto and ICICI Bank super closely to see if they can hold up the broader market with some institutional support. Your defensives, like Nestle India and Tata Consumer, are going to be key safety plays for capital looking to hide out from today's volatility. And of course, the major pharma companies are going to be under a microscope today to see just how deeply those U.S. tariff fears get priced in right at the open. And this brilliantly illustrates the massive tug-of-war we're expecting today. Today's momentum is going to be entirely dictated by these overlapping global cues. From the soaring Brent crude trajectory and a very shaky U.S. market's overnight close to the early weakness we're already seeing in the Nifty.
Add in the pressure on the Indian rupee against the dollar and the constant push and pull of FII and DII flow activity, and you, my friends, have a recipe for a highly reactive trading session.
Which brings us to perhaps the most important part of our explainer, your trading strategy. With today being a weekly expiry session, volatility is absolutely going to remain elevated. So, rule number 1, wait out the first 15 to 30 minutes after the market opens. Let the dust settle. Number 2, please do not chase the opening gap down. Wait for the market to establish a range. Number 3, trade only on clear confirmation and quality setups based on those key levels we just covered. And number 4, this is non-negotiable. Use a strict stop loss to protect your capital. In a market environment like this, strict discipline is literally your best edge. That was your Indian stock market update for Thursday, July 23rd, 2026. With global pressures mounting and key support levels being violently tested, the real question heading into the bell is this: will domestic buyers step in to catch the falling knife today, or is this the start of a much deeper correction? If you found this explainer helpful, please like, share, and subscribe to Market Gurukula. Join our Telegram and WhatsApp communities for daily market updates, technical analysis, swing trading ideas, and investment education. Thank you for watching.